the dividend growth history works out to something like a 10% dividend growth rate over the past 10, 20 years. If you look at 1, 2, 3, maybe 3 decades. And the future, of course, is likely to be somewhat different. We would argue that equities have more likely an interesting future than bonds, which we covered really at the beginning here.
Mm-hmm.
So if you actually have a 10% dividend growth rate, just to make the math easy, and you buy a portfolio of good quality dividend stocks that are paying, let's say, 2%, again, to keep the math easy, 7 years from now, that 2% will have, on the dollar you invested today, will have grown to 4%. You'll be getting $4 of income per $100 invested 7 years down the road. That's just that whole rule of 72 type of math. And so you end up basically with a 4% yield then on cash invested now. Whereas if you actually bought bonds now, and let's just say it was a portfolio of treasuries and corporates, investment grade, that yielded the same 2% to keep the math easy. Maybe you could push it and end up in the real world getting a little bit over 2. But the growth on that portfolio, the yield growth, is going to be somewhere near 0. And the risk is, if in fact yields go up, you lose value on your portfolio. But the thing that people never think about, it seems, is 10 years from now, let's just imagine your portfolio matures. What do you have now? Cash and reinvestment risk. And what if we were Japan? What if yields are 0 in 10 years? Then what do you do with your $100 or 100,000 or 100 million invested in bonds? You basically would have been making 4% if you'd owned the equities that grew their dividends, but instead you got a bunch of cash, you got to reinvest it somewhere. So talk about, the 10% dividend growth rate is the past. And what do you, let's talk first about what you think of the future, and then what you think about that income growth scenario that I just described. What is dividend growth? 10% would be wonderful if we continue to get dividend growth of 10%. Are we going to get, do you think we'll get anything close to that?
I think it's possible. I think it's important to sort of disconnect the last decade or so, or basically ever since the end of the financial crisis, from the long term, because the long-term numbers play out that dividend payers outperform non-dividend payers, dividend growers outperform dividend payers. People have kind of grown accustomed to this idea that it's all mega cap growth in tech, and that's where the returns are. And that's certainly been the case over the last decade. But like you mentioned, this has also been an environment where yields keep coming down. They're at record lows. The government has been pumping trillions of dollars into the economy, so they've created a favorable environment for corporations and investors. So that's really fueled a lot of that growth. But now we're starting to come to the end of that cycle. The Fed, it seems, is going to start tapering in November. They said yesterday, I think, that they plan on wrapping that up by the middle of next year. And then, probably the end of 2022, beginning of 2023, we're looking at rate hikes again. Now, whether that actually happens, who knows? The Fed has pivoted before. They may do it again. But I think we're going to start entering this period where dividends become an important part of the portfolio again, and the portfolio returns. And I think we've seen over the long term, something like 40% of total return comes from dividends. And we haven't seen that over the last decade, but I think we're going to start moving into that period where the companies that are really backed by strong financials and cash flows and the ability to pay dividends and grow dividends, these are the ones that are going to start coming back into favor. So yeah, your idea, will we get 10% dividend growth? In places, I think we will. I think in places we probably won't, which is why I think it's probably better to maintain a diversified portfolio of dividend growers or quality dividend growth through an ETF. That's probably the better way to play it. But growth stocks, tech stocks are very richly valued right now. So I don't think there's a lot of room for multiple expansion there. Dividend payers, I think, are relatively cheap relative to the market. And I think we're going to see some of those heavier dividend growth plays, like specifically in the financials. I think that's a good opportunity, maybe even the staples again. But yeah, I just think it's important to sort of not think that the last decade is the way it's going to be over the next several decades, because this stuff moves in cycles, and I think we're going to start cycling away from growth again and into more income-oriented equity investments.